So, hi guys, welcome back. Today we're going to be looking at Palantir Technologies. It's been one of the most talked about companies on the market, and rightly so. It has been quite volatile, and that's why it has garnered a lot of attention. People also believe it has a very disruptive potential, and it can grow exponentially over the next few years. So, Palantir Technologies is a software company that specializes in big data analytics. If we can see here, it's up more than 200% this year. But since its high earlier in January, February this year, the stock is down close to 25%, which presents a very interesting buying opportunity. I did a stock analysis on this company a few weeks back, and since then the stock is up another 25%, which I believe brings us to a different stage in this stock's lifestyle, and we can once again reevaluate after a 20 to 30% increase whether this stock is still a buy and whether it can still grow in the future. So today I'm going to do a stock analysis on this company. If you do enjoy, consider subscribing. It is free and it does help me out a ton. If not, thanks for watching anyway. Onto the video. So the first thing we'll be looking at is Palantir's quarter 2 2021 business update. So if we scroll down, we can see that their quarter 2 revenue grew 49% year over year to $376 million. Their US quarter 2 commercial revenue had a growth rate of 90%, which is really good growth over the last year. Good signs for the company there. In quarter 2, their total contract value booked grew 175% to year over year total contract value of 925 million, up from 337 million in quarter 2 of 2020. So once again, that's quite a big jump there, showing the company is growing at a very fast rate. They added 20 net new customers in quarter 2 alone, and their total commercial customers grew 32% quarter over quarter, and the commercial customer count has increased 61% since the very end of 2020. So once again, we can see over the last year, Palantir has been increasing its customers, increasing its US commercial revenue, increasing its net booked value, and its revenue as a whole. So once again, it's very good signs for the company that it is growing at a very fast rate, and it's making some good money from that as well. Note that it is not a profitable company as of yet, but I feel like that is offset because how much they've been reinvesting into their company and how much they have grown over the past few years. So their revenue from our top 20 customers grew 39 million in quarter 2 of 2021 from 36 million in quarter 1 of 2021. So although their revenue from their top 20 customers is only 39 million out of if I remember, close to 350 million revenue in quarter 2 of 2021. Although it's not too high, this is a very good sign for Palantir. It shows that their customers are extremely diversified, and because they're so diversified, if any customer cancels their contract or something happens in between a customer and Palantir and they cancel the contract, the company actually wouldn't be hurt too bad at all. The top 20 customers only grew to about 40 million in revenue, while their yearly revenue is more than $1 billion total. That's a very good sign for the company, even though the top 20 customers don't actually contribute too much in terms of revenue there. In quarter 2 of 2021, they closed 62 deals at worth a total of $1 million at least. 30 of those deals were at least 5 million, and 21 of those deals were at least 10 million. So you can see that they have a wide scope of deals that they're making with many different sizes of companies. Shows how diversified, as I previously mentioned, this company is, which is a very good sign. So just a recap of the first half of 2021, they had a revenue growth of 49%. Their adjusted free cash flow of 201 million represented a 28% margin. The adjusted operating income of 233 million represented a 33% margin, and the visibility into the future growth is strong, and total deal value increased 63% to $3.4 billion there. So if we just scroll down ever so slightly to the next part I wanted to talk about. Just give it a sec. So here in quarter 2 of 2021, they added 20 new customers and booked 925 million of contract value. This is a 13% increase from the 149 customers they had in the trailing 12 months at the end of quarter one of 2021, and even further up from the 139 customers they have in the trailing 12 months ending quarter four of 2020. In quarter two of 2021, they also signed deals with the US Army, the Air Force, and the Coast Guard, including 2 years, 100 million deals with SOCOM. They participated in US Northern Command's third Global Information Dominance experiment, driving applied AI decision making in real world scenarios, and they revolutionized the Northcom's ability to wield data to outpace adversaries there as well. So in 2021, they signed new deals with the HHS and the CDC, including doubling their contracts for the Tiberius to help US manage vaccine production, distribution, and administration there. So out of the last two slides alone, we can see that they have their customers include massive government organizations such as Defense and the CDC there as well. You can see that their products can be used in a wide variety of different places. They can be used in defense, it can be used in AI tracking, it can be used in disease control here as well. It can be used in administration, distribution, and production of vaccines and other things that a government would want to control with. So you can see how Palantir's product is a very versatile thing, and it can be used in many different aspects there as well. In quarter two of 2021, they signed a deal with the Federal Aviation Administration, where Foundry will support aircraft certification and operational safety. They continue to develop their channel partnership in quarter two of 2021 with a new partnership with DataRobot, focused on helping customers with demand forecasting. So overall, you can see how versatile their product is and how much demand there is for their product as well. So on to another important news relating to Palantir. Cathie Wood's ARK Invest loads up on 5.2 million shares of Palantir Technology, out of which, so ARK disclosure, which is done voluntarily rather than its response to trading rules, shows that 6 of the firm's actively managed ETFs bought Palantir shares on Thursday. It closed 11% higher on Thursday's session. The flagship fund ARK Innovation ETF, ARK-K, purchased 2.3 million Palantir shares. The Genomic Revolution Multi-Sector ETF, ARK-G, took 1.72 million shares, while ARK's Next Generation Internet ETF, ARK-KW, had 587,000 shares. ARK-Q grabbed 559,000 shares. ARK Fintech Innovation, ARK-F, purchased 370,000 shares. ARK-X also brought 61,000 shares there. So they had 8 of the firm's actively managed ETFs all bought Palantir shares on Thursday, which totaled up to 5.2 million. So Cathie Wood's investment thesis is more specifically on disruptive technology and fast-growing companies that have a very strong base to launch off in the future. Palantir definitely supports this thesis. It is a very fast-growing company with a very versatile product, with a high demand for its product as well, and is growing at a very, very fast rate. And with the backing of Cathie Wood and her positive intent on the stock there, combined with many average investors who are very bullish on this company as a whole, it is a very good sign about how people view this company and how that will benefit them in the long run as well. So this is just a recap of the previous quarter two beats. Their shares are up 9% pre-market trading. Their revenue increased 49% year over year to 375 million, coming in 14.5 million ahead of analyst estimates, driven by the 90% pop for US commercial revenue. Adjusted earnings of 4 cents per share beat consensus estimates by 1 cent there as well. They closed 62 deals worth more than 1 million, with nearly half are valued 5 million or more, out of which a third are worth 10 million or more. Cash flow from operations totaled 23 million, with adjusted free cash flow of 50 million there as well. For the third quarter, sales are expected to come in around 385 million, which is above the 380 million current consensus, and we're looking at a 10 million increase quarter-over-quarter revenue increase there as well. The company raises its full year cash flow from the above 150 million to 300 million, and annual revenue growth is still expected at 30% compound annual growth between 2021 through to 2025. And as previously before, the Palantir has ongoing deals with the US Defense System and the Center for Disease Control to work on COVID-19 distribution there as well. So if we just scroll up here, we can see that Palantir is diversifying its business away from government sector by expanding into the commercial sector with small, medium, and large businesses. This transformation can turn Palantir into the most important software company on the face of the earth. For years, Palantir had built advanced data analytics software operating systems for the US government and its abilities to counter terrorism while protecting civil liberties. Today, it has a monopolistic dominance over the data analytics software within the government sector, evidenced by Palantir's contracts with the US Army, Coast Guard, Department of Defense, and Center for Disease Control as well. To say that data is an important asset in the modern world is certainly an understatement. With massive amounts of data being created every day, governments, corporations, and people are now utilizing data-driven decision-making to improve business operations. Today, data serves as a source of competitive advantage, and the advancements in the computing power of AI and machine learning technologies are ushering in a new era for the business world. So if we just scroll down, the Foundry platform was launched in 2014. However, the work with the government has kept corporations at bay. However, after Palantir's direct listing last year, its business product offerings have received a greater traction in commercial sectors because companies outside the government are now more and more looking forward to work with Palantir. In quarter two alone, they added 20 new customers, which is a 13% quarter-over-quarter jump in total customers, with their commercial customer count going 32% quarter-over-quarter there as well. As Palantir adds more commercial customers, its commercial revenue growth is expected to continue accelerating in upcoming quarters. For quarter two, Palantir's commercial revenue was up 28% year-over-year, which was an acceleration from the 19% year-over-year growth registered in quarter one of 2021. Most of this commercial growth is coming from the US, as evidenced by the 90% year-over-year growth in Palantir's US commercial revenues as well. This is from the investor relations page we looked at earlier. Their commercial customer count grew 32% quarter-over-quarter with 20 new customers. Their commercial revenue grew 28% year-over-year, and their US commercial revenue was up 90% year-over-year as well. So if we look at some analyst estimates, Palantir's strong government and commercial segment performances are set to result in revenues of 2 billion in 2022 and 2.5 billion in 2023. So if we look at current Palantir's revenue, in 2020 they had only they had a $1.1 billion in revenue there. However, by 2022 we're expected to hit 2 billion itself. So we're looking at a 100% increase between 2020 and 2022, and 2.5 billion in 2023. So Palantir's CEO Alex Karp has guided for a 30% plus growth in 2021 and compound annual growth rate for the next 4 years until 2025. However, Palantir is currently growing at 50% right now, with billions of dollars worth of contract value booked, $3.4 billion to be exact, and contract value is booked is growing much faster than revenue. So therefore, it is possible for Palantir to easily deliver 40 to 45% compound annual growth rate up until 2025. So Palantir's next big move is to go small. So in the early years, Palantir's software offerings were focused on the government sector. However, since Foundry was developed in 2014, the government has slowly been gaining tractions among large corporations. So one thing that Palantir does is it invests a lot into small SPACs and small growing companies. They buy a lot of shares of companies that are really, really small, and they help these companies grow by lending them their Foundry platform and then sell shares at a higher price. So it is quite an innovative solution that they have to keep the money that they do have growing at a very constant rate. So if we look at right now, the Palantir currently has 10 deals worth about $250 million worth in shares to various entities, including SPACs and other smaller companies. So 9 out of those 10 deals were agreed to in the second quarter. So investing in SPAC companies can provide a huge returns to early investors. And Palantir does invest quite a lot in SPACs, but it also enters in multi-year service contracts with other SPAC-related investments. So out of the $250 million worth of shares that they have committed to buying, if all goes to plan, they're looking at a long-term revenue of $430 million when they look to sell these shares in the future. So that's a very good sign for Palantir, that they're basically using this money that they have made and they're investing that into smaller companies and making acquisitions there, which would no doubt help their business to grow in the long term if these SPACs do turn out to be beneficial to the company. Overall, this is quite a risk-taking, it's quite a risky thing that they're doing right now because there is quite a big chance that these SPACs may go to bust. But if all goes to plan and the management has quite a pretty good history of making things go to plan with previous investments, I would expect that if not 428 million, we might be looking at 300 or 350 million in revenue in the future, which is still a solid return on investment for the company. The last thing we'll be looking at today is the technical analysis. There isn't too much to look at in terms of the share, but one thing I want to note is that ever so recently the stock has gone up to gone above the 20-day simple moving average. This basically means the stock is trading slightly higher than it has on the average of the last 20 days. So between March and September, the 20-day simple moving average hasn't moved a lot. It's moved between $21 to $24 and has been basically going up and down between $21 and $24 there. And the stock price has also followed that pattern, basically going slightly below to slightly above to slightly below to slightly above the 20-day simple moving average. Right now, the stock has broken up slightly higher than the 20-day simple moving average. This has happened last time earlier in June before it fell back down. So if recent trends is to be noted, I wouldn't be surprised if the stock is down maybe $2 to $3 over the next few weeks. But right now is still a very good time to invest in Palantir. The stock is still down more than 25% since the beginning of the year, and with its high of $45, it is well below that as well. We're looking at based on management expectations, we're looking at 30% compound annual growth rate up until 2025. And with the constant beating of analyst expectations there, it wouldn't be surprising that with running the deals that they are making with acquiring SPACs and increased deals with the US government and the US commercial sector there as well, we could be looking at 40 to 45% compound annual growth rate all the way until 2025. So I believe right now is a very good time to enter the market. It does seem very promising in the future. There are some certain risks, but I feel like the growth that is promised and the growth that they're expected to have can easily overcome the risk that they are taking. So if you have made it so far all the way to the end of this video, thank you for watching. Do subscribe. And let me know if you want to do some smaller companies, slightly under the radar companies, or more dividend companies rather than long-term growth, which is what I have been focusing on for the past few weeks. If not, thanks for watching, and if you do choose to invest, make sure to do your own due diligence, and I'll see you next week. Bye.